We got to talk about this JP Morgan collar trade. Nobody on Wall Street talks about that, do they?
Yeah, it becomes quite a bit of a focus. So, and I would just add that obviously the Tier 1 Alpha guys and some of the other folks on Wall Street are flagging this as this Friday as one of the biggest OPEXs ever. It feels like every new OPEX is the biggest OPEX ever because of the proliferation of the flow, as you would say. But I would also flag that tomorrow morning is a fairly significant VIX expiration of both futures and options, so a big one to flag as well. And then obviously, as we've kind of alluded to here, large incumbent hedged equity player is going to be rolling their put spread collar at month end. There's some splashy, if you will, strike prices there, and that'll certainly be a big focus. So from the options community perspective, I would say this week, next week, that they're going to be significant.
Mm-hmm.
So
now, if you could, you would, right? I mean, everybody has their own style. Everyone has their own solution to the market. Would you roll your hedge just quarterly at the end of every quarter and use big round numbers?
I think that probably wouldn't be something I would do. I'd probably look to be significantly more dynamic and taking inputs like risk ranges, if you would, into the consideration of what I would do. And I think we have an index that does that pretty well. That you can find out more about at hedgeyam.com.
Now, what if the guy on the 8th tee box has a minute or two, and he calls the guy at the old wall, and he's like, "Hey, yeah, I heard about that. Like, why would I do that?" And the guy's like, "No, it's really good. It's a sophisticated hedge. You want to be hedged, right?" And he's like, "Yeah, I gotta go. I want to be hedged." But isn't Wall Street, in many cases, that's the point? The old wall sells you bullshit.
Yeah. Well, there's some pretty sophisticated managers not far from us down by the train tracks in Greenwich who've been pretty public about the flaws of the products that we're mentioning from the incumbent set. But yeah, I mean, I think we would agree with a lot of what they're saying, and that's why we've endeavored to develop our own products. So.
Well, I think it's a good spot to close. I mean, again, we get it. This is Wall Street. People want certainty. People want things that go up. Show me an IPO. And at some point after a quad 4, I want buffers. I want hedges. I want to go bowling with the buffers, right? I want to bowl like my kids bowl so I can feel better about the score. We get it. That's what they want. But just because somebody wants something doesn't mean that they get the properly constructed thing, right? Nothing else in your life would you think of it that way, right? So God help you. I mean, again, I would say, do you think about your house that way? Do you think about the construction, the difference between a master builder? I know this one Polish builder in Westport who's phenomenal, and some lackey and some shit, right? Do you know the difference? I build houses. I was in the shit I was the tar baby, don't forget, with my dad. I know the difference, right? Do you care about the difference? Would you go buy a car or a house? These are pretty big purchases, right? Would you care about the quality control? Would you care about the efficacy of the roof? Like, some pretty big things. So if you're going to put a hedge around your retirement account, I'd say you should probably have the right stuff that works, right? This is one major thing in your life. We regulate homes and home insurance. We regulate cars and how you're able to drive them, right? Regulating what Wall Street creates in terms of perceived hedges, too much money for them to make on that. So let's play against them.